buckle your seatbelts. On today's show, we have top global influencer, serial entrepreneur, Matt Barrie. While we're specifically discussing his acquisition of Escrow.com, his strategy in acquisitions in general, we learn so much about what he sees in the domain industry behind the scenes at Escrow, and also just jam-packed with commentary about what are the best approaches for entrepreneurs, tips of the trade. You don't want to miss 1 minute. Enjoy. First, serious about online trading? Secure your funds, keep your merchandise safe, and use a company that keeps the buyer and seller protected the whole way through. That's Escrow.com. Payments you can trust.
FD was built by domain investors to increase your inquiries, sales, and profit. Forget spreadsheets and archived emails. Manage your entire investment portfolio in one place using a secure and completely confidential platform. Learn more at FT.com. That's EFTY, FT.com. Hey, Sherpa Network. I'm Tess Diaz, executive producer of DomainSherpa.com. And today we have Matt Barrie of Freelancer.com and Drew Rosner of MediaOptions.com. Hi, guys. How you doing today?
Thanks for having me.
Great.
Delighted to see you again, Matt. Matt, you came into the freelancer space by such an unexpected route. I'm very interested to hear a bit about it. So you're already an experienced entrepreneur. You registered, I love biditout.com back in 2008, and then eventually acquired getafreelancer.com. Is that right?
That's right. I had a $7 budget for my first brand. I couldn't get a Media Options.
I didn't answer your email.
Yeah. So yeah, I basically stumbled across Get a Freelancer when I was trying to build a website to help my mum out, and I needed to get some data entry done, and I couldn't get a little brother or sister or a friend of mine to do the job here in Australia because they were lazy, basically.
Yeah.
And so I typed into Google data entry online or something or other, and I found Get a Freelancer, and I posted a job, and the rest was history. I blew my mind. So.
Yeah. So, you started out with Bid It Out, then you acquired the company getafreelancer.com. And how did you transition to freelancer.com? Certainly want to hear a little bit about acquiring the domain, but also, you went somewhere from a $7 brand name in the beginning over to absolute global dominance with freelancer.com.
Yeah. So what happened was I had left my last business, which was a semiconductor company, and it hadn't really set the world on fire at the time, but ultimately it sold to Intel. That's a happy ending eventually. And I was looking for something to do, and I said to my mum in 1995, you should build a website to sell her, she says wholesale arts, crafts, paints, glues, things like that. And if she had a website in 1995, she would have been a pioneer in e-commerce, like pioneer, right? Because I was doing my, I was 95, I was doing my, I finished my honors degree in computer science. I was back doing electrical engineering. So I was like, you should build a website, right? And so 2007 comes along, and she still doesn't have a website. She's still photocopying bits and pieces on a photocopier. I mean, it's just, I don't know how the business ran. It was just bizarre. 10,000 products. So I said, okay, I'll build you a website.
Wait, so your mom is an entrepreneur?
Yeah, she's got her own business.
Huh. You think
she was Etsy before Etsy?
Yeah.
Yeah, only Etsy did a better job. But
you write that in your Mother's Day cards?
No. Anyway, she trailblazed a path for Etsy, right?
That's right. That's
slightly different business anyway. But she sells more of the stuff that people use at Etsy to build the products. But I was trying to get this data entry done, and I was just frustrated. I just couldn't find someone to do it. I would have loved to have done this at home. I said, fill in a spreadsheet, name of the shop, phone number, address. On 1,000 rows, I'll pay you $2 per row. It'd be $2,000 of work. Do it from home on the computer in your own time. I would have loved to have done that. I had a paper route. I had all sorts of things I did as a kid. Multiple paper.
I was doing hard labor. Never mind data entry.
Exactly, and I just couldn't get to do it, right? So then I typed into Google cheap data entry or data entry online or something, right? And I found Get a Freelancer, and it looked terrible at the time. I mean, it looked like Craigslist, right? It was just grey, horrible-looking website. And I posted a job and went to lunch, and I forgot I posted the job. And I came back to my email, and there was 74 emails saying I'll do the job for you. And I was like, this cannot be real. I just thought, this is impossible. It can't be real. There's no way that there are 74 people wanting to do the job. I can't get one. I went through and I thought, oh, wow, there's actually people here and they're actually bidding on my job. And I said, well, hang on a tick. Why are the people bidding less than $2,000? I said, the budget's $2,000. People are bidding $1,500, $400, $300, $200, $100. I thought, why would someone bid $100? I said, the budget's $2,000. This is ridiculous. And then I just discovered more people from emerging markets around the world. And, I look at wages globally at the time. And I should have, I grew up in Jakarta, so I should have known this, right? But for some reason, I just didn't think about it, right? And then I got the job done in 3 days, and the job was perfect, and I didn't have to pay until the job was done. And then I just thought, oh my God, this changes everything, right? I just thought, this is just phenomenal. I can hire an army of people to do anything I want. I should build a business for this. What sort of business should I build? I can build anything. I can, and I was there at home by myself, and I was like, wow, I could build a whole company without having to hire people, right? And what sort of company should I build? And I thought, well, actually, I like this website, Get a Freelancer. Maybe I should try and copy it, right? And I saw there's a few other projects in Get a Freelancer, copy and Get a Freelancer. So I thought, why don't I do that? So I started bidout.com, and I downloaded Social Engine, which is like this white label Facebook, and I hacked together a classifieds module, and I was hiring freelancers off Get a Freelancer to copy Get a Freelancer. And ultimately Get a Freelancer was copied off Scriptlance. And I bought Scriptlance as well. But I got it going, and then I did a bit of a survey of the space, and there was a couple hundred companies in the space. There's about a dozen that had some sort of traction, but not a lot of traction back then. And I thought, no one's going to fund me to be number 13. So maybe I need to buy rather than build. And so I went to half a dozen of the companies and said, do you want to sell to me? And a few of them said, yeah. And the best is actually with Get a Freelancer, because I had the best traffic, because I had the best SEO. Long story cut short, I bought it. And, the rest of history. It was doing $1 million a year in revenue, and it was the 5,000 biggest website in the world, and had 500,000 users on it. And I raised the money to buy the business, and not a cent more. Didn't raise any operating capital. I just bootstrapped it from there, and took it public 4 years later at $1.1 billion market capitalization. So that was fun.
Amazing.
That was fun.
That was a 16,000% return for some guys who gave me $5,000 here or there. I think $5,000 turned into $890,000.
Wow.
Yeah. Not as good as Uber. $5,000 turned into 25 million with Uber. So
yeah.
I saw that recently. It came out.
Unbelievable.
Yeah.
Was bidout.com your first domain name ever?
No.
Okay.
No, I had a lot of domain names from a long time ago. I was registered in 1996. In fact, I just got a Class C IP address range transferred to me from AppNic, because I registered the domain so early that they used to give away 256 IP addresses at the same time. And I'd just been sitting on the records for ages, and I finally got around to saying, hey, can I get the IP address range? And they're like, okay, we got to send a bunch of documents. I had to go get like all these signatures from people from 1996 that I hadn't seen before and a long time. And I got it. So I got Class C. So I couldn't afford, actually back then, I had all these domain names registered that I couldn't afford, because it was I was a poor student. It was $35 a year, and you had to do minimum 2 years registration back then. And I had all sorts of names registered. It was early days, right?
And did you lose all of them? Do you still have?
No, I've got some of them still. I've got a bunch of strange ones, but back then I didn't really think about, well, if this gets big, should I own the canonical name for the industry? Instead, I was like, oh, this is kind of a fun name. I'll register that, right? So yeah, a lot of regret actually, because I could have made a lot of money from that. But it's okay.
I don't know, Matt,
regret.
that you're
Yeah,
hurt.
you can't regret.
Yeah.
Yeah, you can't regret.
You've invested well over the years.
It's okay.
So you bought how many different freelancer companies?
I think it's about 15.
15 companies, and you bought the domain name freelancer.com. Was that a company as well when you bought it?
No, that was just a domain name. It was actually a guy who had a magazine called Computer Freelancer, and the magazine had gone out of business. And he was a British guy living in Canada, and he still had the domain name, so I bought it off him.
Okay.
And in actual fact, you would probably be able to tell me what was the most money someone paid for a domain name in 2009?
Oh, well, so publicly,
I should know this. I just look it up in
Yeah.
my database. What am I doing?
Yeah,
Are you looking it up in the Escrow.com database?
Oh, I could look it up. Yeah.
Yeah, I think publicly it would have been the sale of sex.com the first time, which I think was 9 million.
Was that,
there
did
were
that sell
bigger sales,
2009, was it?
Yeah, and then it sold again just shortly after that for 13 million, 13 something.
Yeah.
I'm
I'm pretty sure I paid in the top 10 for that year.
Yeah.
The name. Pretty
Yeah.
sure.
For the year,
I paid
I'm not sure.
$325,000 for it.
Yeah.
Okay.
Which there weren't tons of domains changing hands at those prices at that time.
No way.
Just out of curiosity, flipping to escrow.com, putting your escrow.com hat on for a second, is it fair to say that a domain sells for $1 million or more, every business day on average?
I don't know for sure if that's correct, but I'd say it'd be pretty close.
Yeah,
I'd have to check. I mean, I don't sit there and look through every transaction that goes through.
No. But just,
That's a big change from 2009.
I mean, we did. It's about that on average. Well,
Yeah.
at least. Well, I wouldn't say actually $1 million for one domain, but we do about $1 million a day of domains.
Okay.
Okay. I mean,
Right.
either way, from 2009, that's quite the increase. Where 325,000 is in the top 10 of the year. Yeah. So, what did you pay to acquire 15 companies, just to compare?
Oh, I have to add it all up. I'm a deep value investor, so I don't like to pay a lot. Yeah,
I think we need to do another show with Matt just on his negotiation strategies.
I'm very patient.
Have you negotiated with him? He's in the upper echelon, let's say.
Oh no, you were pretty
And
good
I
actually as well.
Quite a good negotiator.
You were pretty good. I didn't actually go that hardball because I think she thought what I bought from you was fairly cheap. But yeah, Andrew's pretty good. But yeah,
Andrew's
no,
pretty good.
yeah,
That's pretty
yeah. So yeah, I look, I can't. Let me add it all up in my head. It's probably in US dollars, it would be under 10 US. I think a little bit under 10.
10 million.
So
Yeah.
I want to ask you, just sort of general business strategy. Like, you've clearly taken an approach of acquisitions. Not that you're not targeting organic growth, but you've clearly had a lot of focus on acquisitions, acquire your competitors, basically buy market share.
Yeah.
Is that something that you think is that a strategy that you utilize specifically because of the niche you're in, or is that something you feel in general is just a strong strategy?
Well, with marketplaces, I think it's a great strategy. You have to buy them all of them.
Okay.
And the trick is trying to get them at a good price at the right time, and you got to be patient over many, many, many years. I mean, there's business I've tried to buy in the freelancer space in various niches, and I've got things that I've had on the list for 6-7 years, and I still haven't managed to buy them because someone doesn't want to sell them at that price.
Yeah.
Um,
Timing's everything.
you need to just find the right day, right?
Yeah.
And
Yeah.
you would know this. Just the right day comes along and it happens, right? For various reasons, right? So
patience and persistence.
Yeah, patience and persistence. So so the thing is that with marketplaces, you want to pull liquidity together as much as possible, right? And I don't run them separately. I shut down every one of those freelance businesses and just
of course.
everything and just pull the liquidity in, right? And that made us unstoppable. I mean, we've got more freelancers than anyone else in the world, 33 million. And we're getting, I think 14,000 or something signing up per day. Check the stats somewhere. So, that's such a moat around the business. If you're trying to start a business from scratch now and go after this, you couldn't do it, right?
Yeah.
I mean, by the time you get to 1 million users, I'll bet 100 million, right? And so good luck, right? So it doesn't work. It doesn't work everywhere. I did have a good look at the escrow space after I bought Escrow.com, and I talked to a lot of the niche players that are out there about acquisition, and I just formed a view. There's just no way I can acquire any of them because the problem is it's a regulated financial services business. You take on all the liability and all the risk of their previous transactions, and none of the competitors are licensed properly, right? They've all got 0 or 1 license, right? And as I've said to you before in a previous episode, the US has 50 states, 4 don't require licensing, 6 territories. You need 52 financial services licenses to operate in the United States alone, right?
But
and every one of them.
Oh, sorry. Every business you're in, you really dominate. And you build a moat with acquiring competitors. And then you acquire the, as you like to say, the
canonical
name for that industry, the keyword category killer. It's quite the strategy. Do you find that there's a timing in balancing those two types of acquisitions, when you want to buy the category killer and when you want to buy out the competitors?
I buy the competitors whenever I can afford them. I think they're a good price, and I buy the domain when it's cheap.
Fair enough. Fair enough.
Value investing 101.
Yeah, I mean the problem with value investing is you can wait a long time, right? Like momentum investing, you just ride the wave, you pay whatever, right? And that's kind of what happens in Silicon Valley. Is everyone kind of pays more and more and more and more and more, and hopefully you get to the promised land before the music stops. With value investing, you can be waiting a long time before the market turns, right? So
the market can stay what is the expression? The market can stay
irrational longer than you can stay solid.
Longer than you can stay liquid. Yeah. So I wanted to ask you, some of the broader, this is DomainSherpa, and we've had you on to discuss, Escrow.com and the domain market, but I think that there's some macro trends that are really interesting for both sides of that business, for the freelancer side of the business. And obviously the reason you got into escrow and your personal as well as professional interest in domain names, these things all tie together. They're all part of one bigger picture. So looking at some of those trends, like there's 2 really big things that I feel are opportunities for freelancer, but also in the domain space. One of them being the concept of like decentralized organizations. And you had talked about how getting into freelancer, that was kind of the idea. Oh my God, I can start a company and not have any employees.
Yeah.
And that concept has through multiple iterations over the last decade, since you originally had the idea, has adapted. And I'm invested in a company that's trying to create infrastructure around creating these decentralized organizations. It's called eCorp. But I feel like Freelancer could be the nucleus of that entire wave, that entire trend, because you mentioned that providing some of the ancillary services to these freelancers is difficult, like healthcare and insurance and things like that. But I feel like cap tables and just being the glue that brings together those various freelancers and roles together with the objective of the organization itself, and basically assigning values to the various roles and inputs that go into this organization, and then distributing the outputs that are earned from the organization. I know that's a complicated way of expressing this question, but is that something that you've thought about? Do you see that as a trend the way that I do? Like sort of a movement towards, hey, there's somebody like even media options. I mean, we're not totally decentralized in the sense that we are we're an organization owned by one person that, has employees, even if our employees are distributed. But, maybe we're like one leg in the water towards a distributed organization. Coming back, is that something that you see as viable, sort of a fully decentralized organization? Is that something that...
Absolutely. And we actually, in the Freelancer broader group, we're a number of businesses which are horizontal platforms that enable this. So Freelancercom, it's a global marketplace for labor, right? Services. So you can hire a team to get to, turn those spark of an idea into reality. We have Escrow, which is a global payments platform, and we have now a freight marketplace called Freelancer, which is 7,000 transport operators around the world. We can ship anything. It's labor, payments, freight, right? So and the great thing is they'll play off each other. So the freight business now, you've got 7,000 professional transport organizations. One might have a shipping line, and one might have 1,000 trucks. But then that's layered on top of 33 million freelancers now, who could do metro point-to-point delivery. So, if you're a flower store, you want flowers delivered, right? You can now use freelancers to do that, right? I mean, Uber's got 2 million drivers. We've got 33 million freelancers, most drive, right? Yeah. So, the scale we can reach is huge with this. And, the more that we can build the physical organization and a virtual representation, here's your staff. They're on demand, they're on your phone, they're on your computer, they're everywhere, right? Anytime you need the stuff, they're on call. The more that we can provide a lot of value to all sorts of organizations around the world to get things done. We have a great service we've just launched, which is called Technical Co-Pilot, which is basically every startup person at a conference is looking for a technical co-founder. Well, we can provide that to you now. We've got project managers that sit there and hear what you want. They'll write a specification for you. They'll ticket it up. They'll place a virtual team, and they're fantastic. This is what I'm using with Lifedoc.com. I'm using a technical co-pilot to kind of run the whole thing for me. And how
does media options get that? I mean, we need like a CTO. We need a CTO.
Yeah.
We need somebody to manage this side of the business, because I'm spending 20-30% of my time dealing with technical things that I not only am not qualified to deal with, but I don't want to deal with.
I'll hook you up after this, right? It's phenomenal. Like it literally is. They'll do anything. They'll staff the business. They'll hire the right people for you. They'll write a technical specification, break it down into tickets, log it into the system. They'll run like an agile process. So they'll do every week. They'll kind of do a sprint planning, work with all the freelancers. At the end of the week, they'll give you a weekly report and a retrospective of kind of what happened in the week, and it just runs autopilot, and it's just phenomenal. In fact, I mean, over the weekend, my SSL certificate expired, and he's like, "Yeah, we need to renew this. I'll jump in the Cloudflare for you, and I'll get it all fixed up for you." Or it's just incredible.
That's amazing. And it's a new approach really to entrepreneurship. And most of this episode, I would like to discuss entrepreneurship with you. I have a couple quick questions about freelancer.com first. So let's talk about.
I didn't get to my second trend that I see. It's like a really cool, interesting. So I'm really glad to hear that. Like, I think that's really interesting. I felt like it was a little bit out of left field, but it sounds like it's closer than I even thought. I mean, it'd be so interesting if you were able to tie that together visually, like in some way, where Freelancer, or some other platform that you've got is sort of that nucleus, and it's like, okay, here's your organization, and we're just plugging in all of these different pieces for you. And I feel like one of the big components that's missing there is sort of the cap table component, like eShares, of which is now Carta.com, kind of what they're doing. But I don't know if that's a whole other regulatory thing that you probably just don't want to touch.
So what do you mean in more detail around the cap table?
So you've got a distributed organization, and you've got all these people who are contributing value. And one way to pay them is to simply pay them as contractors. as freelancers. But I really believe that there's sort of a trend, even if it's very small at the moment, but it's getting momentum. And it's because of two things. One is sort of the emergence of the shared economy, where people are sort of, taking the freelancer thing to a whole new level. And then secondly is the idea of ownership itself, not, being able to leverage an asset even if you don't own it. And I think it's, there's a movement towards de-risking. There's a movement towards, outsourcing, utility over ownership. And what's missing is remuneration. So if I'm a freelancer, I want to enjoy the upside of what I'm helping you build, particularly if it's not a one-time job, if it's something I'm your CTO kind of thing. And so I feel like there's an opportunity to provide, if it's not equity, but some kind of profit share, or but I think it even could be equity in this distributed organization that's managed by a third party like Freelancer.
I think you prefer to do it as a profit share. I just think it's going to cause a lot of complications with minority equity holders in random locations. And particularly at the micro level, because it can be very expensive for them for people to transact at the micro level. I gave stock, for example, to my staff in the Philippines. We went public, but a lot of them couldn't set up a share trading account. Because you got to put $10,000 in to open the account, etc. So it can be problematic. I think the better way to do that, and actually I do have some ideas around this with Escrow.com, is around more profit sharing, and how you could do that at a micro level with freelancers and so forth.
Okay, so second trend that I just wanted to discuss with you is baby years. You've got the largest population of human beings in the first world retiring, right? And one of the biggest problems, I see with my parents is retiring. They're uncertain about retiring because maybe they've got enough money, but you've got massive inflation on the horizon. You've got a lot of economic uncertainty in the short term, if not midterm, and these people have skill sets that a lot of the millennials and even, I don't even know what you call the people, post-millennial, what you call them, but these people not only don't have that skill set, they don't want it. And I think that there's a ton of value in these baby boomers and seniors who are retiring and need work. And it's I used to work in a deli, and there was this great guy who was, I don't know, him and I just bullshitted all day, and he had retired. He was I don't remember. He worked at a bank. I don't remember what he did, but he had a great job. He retired, but he still needed some income, and so he got this job. He was working at a deli, and it's that guy doesn't want to work at a deli, but it was he can kind of make his own hours, and it was flexible. But it doesn't apply to his skill set in any way. However, his skill set would be super valuable to me. And I feel like Freelancer would be a great place for him to, do that. But Freelancer isn't on his radar. Freelancer is on, the young guy in the Philippines who wants to hustle and, has technical skills. But I feel like there's this whole segment of non-technical. It doesn't necessarily have to be non-technical, but I think the non-technical is the part that's being ignored. And there's skills and people, particularly in the first world, which I bet your numbers would reflect the opposite. The majority of your freelancers are in the third world, and the majority of the people who hire them are in the first world. And I think that there's this huge group of people with really valuable skill sets that are retiring. A lot of them need supplementary income, and they don't want to go get a job and have a boss because that's what they've just stopped doing. But if they could freelance their skill set to somebody, there's a really valuable market there.
Well, actually, the US is actually our number 2 market for freelancers. So
really?
It's after India actually. So we've got millions and millions and millions of Americans on the site. Mm-hmm. Yeah.
Wow.
So it's pretty big. So we've got people really everywhere from all walks of life, and it is not just your typical web developer in India. We've got people across any skill set you can imagine. So financial research, accounting. We're doing stuff. Airbus just posted their first project on Freelancer actually last week, right? So we're doing stuff for the aerospace industry. We're doing stuff for the U.S. Department of Energy. We're doing stuff for NASA. We're doing stuff for all sorts of big enterprises all around the world, right down to the guys getting a $10 website built. Right.
Yeah,
it actually blows me away. We can get up for $10 on the platform. Actually, I posted a contest the other day. I went to the Grand Prix, and my friend got a business card from one of the drivers, and it said racing car driver / I don't know, philanthropist or something. I don't know. And my friend said, I want business cards like that. I said, no problem. I'll get them done on Freelancer. And I just got the app and posted a contest, $10, business cards, whatever. I had 400 entries. And they were great. They were really good. And the liquidity is just phenomenal, right? Phenomenal. It's a great platform if you've got any sort of skill, right? And we do all the way from white collar jobs through to blue collar jobs. I've got people recently to come and clean out my air conditioner and retile a floor, and we do physical jobs, with local jobs.
Oh, really? I didn't even know that. I didn't really. So you also target home services.
Everything.
Okay.
And that's protected by Escrow?
It will be in a month from now.
Okay. So what do I do now? Somebody comes in, redoes my floor, and it's a subpar job. What are my options with Freelancer?
Well, at the moment we have milestone payments on Freelancer, which behave like escrow, but they're not as secure as true escrow, which is a legal construct. So we hold the money basically in trust in escrow, but on Freelancercom it's a milestone payment, which is like a control payment. So the freelancer doesn't get access to the money until you're happy with the job and you release the funds to them.
Okay, makes sense. All right. I want to make good use of our time with you. You're such a just a wealth of knowledge. Oftentimes people see the CEO of a publicly listed company purely as an executive or a business manager, not necessarily, a founder or an entrepreneur. You actually founded Freelancer. How has that influenced how you run and grow the business?
I run the business like an operator, like an owner operator. I sit with the product teams. I kind of work with everyone. I'm not, it's I think very different from like how a hired in CEO would act, where they're really thinking about how much money can I raise next round to pump the valuation up because they've got some sort of stock-based compensation on the valuation of the company. I very much focus on every dollar I spend making more than $1 back and working with all the members of the team. I mean, this is my life, right? This is it, right? This is what I do.
And you were a professor before, or do you do that for philanthropic reasons?
I was adjunct associate professor, which means I was just an external lecturer that came in and taught classes. And I taught cryptography for 14 years, and I also taught a little bit later on. I taught technology entrepreneurship.
And why do you do that?
Well, I got to hire the hackers, and I got to hire the entrepreneurs.
Did you do that before Freelancer?
Yeah, I did actually. I did it 2001. I started until about 2014, and I stopped teaching in 2014 because we're going to launch an education offering on Freelancer. I just teach the world rather than teach university in Sydney.
No kidding. Well, today you're teaching the Sherpa Network. Thank you very much.
There you go.
Yeah.
Are you Freelancer's largest shareholder still?
Yeah.
I like how he answered that. Yeah.
And I'm buying stock as well still, so I'm still buying. So.
Yeah, you guys have. I was checking out the stock actually, and I remember a good friend of mine who, for whatever reason, since years has been talking about your stock, and I remember about I want to say maybe a year ago or so. Yeah, he was like, "Oh man, I think it's time to buy Freelancer stock." It was down to like 40 cents or something, and he was like, I'm buying Freelancer stock, and now I think you're up over 100%. For the year.
Yeah, that's right.
Well
Stock
done.
market.
Let's talk about funding via products and services versus via capital, because you have very much. Have you bootstrapped all your businesses?
Sorry, you know what? Sorry, I hate to interrupt you, but I just on that thought of the stock market growth, I feel like, I was looking at the chart and it looked like your stock performed super well from like 2014 to 2016.
Mm-hmm.
And I was thinking to myself, that was actually a moment when, like, the Dow, for example, was hurting. It was performing quite poorly.
Mm.
And I looked at some earlier trends, and it seems like Freelancer actually performs almost contrary to the overall market. And I was just thinking about that for a second, just at a super high level, that almost makes sense, because as the overall market is doing poorly, you have more freelancers, you have more people trying to supplement their income, or losing their jobs and starting their own businesses. Is that a relevant thought, or is that maybe?
It is at a macro level, because the global financial crisis was the thing that set the whole industry alight, as more people were out of work looking for jobs and businesses were finding cheaper ways of doing things. And in fact, the big thing was actually a lot of Americans were out of work, not looking to get jobs online, but that side business I wanted to start. I'll set up that website now, or help my wife with her business, or so there's a lot of side hustles sort of going. No, I'm simply with the stock. At the time we listed, we hit $1.1 billion US, but it was on a very, very, very high multiple. And so, the stock kind of went up and down, up and down, up and down, trying to figure out, how do we price this thing, right? Because it was initially priced like a Silicon Valley unicorn, right? And on the same multiples those Silicon Valley unicorns have. Only the advantage I have was I didn't have any of that, liquidation preference, ratchets, or preferred stock classes. So I actually had a real $1.1 billion US market capitalization, not the fake manufactured one that happens in the Valley, where they actually turns out when you sell a business, you don't actually get what you think you're getting, right? So, markets go up and down. So, it's 40 cents. The stock was a gift. You should have bought some, Andrew. It's a gift. Yeah, I was buying. Yeah. Gift. Yeah. But to answer the other question about buying things. The question was about paying for things with capital versus do I fundraise to buy things? Mm-hmm. I did that in my last company. So my last company was a traditional Series A, Series B, Series C, Series D, raise money, go on Crunchbase, put your valuation, do a press release. Celebration. I've sold part of my company off. I mean, that's the worst celebration you could possibly have. It's depressing. You should have a wake. You had to sell part of your company off. I had to go sell part of my company off and get some other investor in, because I need to have money to do something, right? That's not. A unicorn shouldn't be a $1 billion market capitalization. A unicorn should be $1 billion in revenue, right? Or even 100 million in revenue, right? That's a more tangible thing, because these valuations, they're all manufactured. I mean, it's one of the biggest scam is too strong a word, but it's completely manufactured. What the game is, let's not call it a game.
Basically, it's just.
Let me tell you how it works. So I'm a US VC in Silicon Valley. What I want to do is I want to find a company doing 20 million in revenue, growing about 40% year on year. And the reason why I want to do that is if you go to Bloomberg and you plot on a graph the enterprise value to sales of a company on the y-axis, and on the x-axis you plot the revenue growth rate year on year. You get like a scatter plot, and it's kind of roughly linear through the mid part of the range, right? And what it shows you is if you're growing about 40% year on year, and that you get about 10 times multiple on your revenue, right? So your EV to sales is about 10x, and you're about 40% year on year. So in the public markets, a company doing 20 million in revenue, growing at 40% year on year, is worth about $200 million. So what the VCs do is they look for these companies, right? And in the Valley, there's a few of them. There's a couple in Australia that are around, and they go, "How would you like to be a unicorn?" And what I'll do is I'm going to give you a check. And the check's going to be for $100 million. And I'll give you $1 billion valuation. How would you like that? And you'll be famous, right? Just sign the dotted line, right? Use blood, it's more permanent, right? And so the entrepreneur comes along and goes, "Here's all my equity. Thank you for the call option," right? And because the VC goes, "Well, the fine print says there's liquidation preference, which is basically originally designed for downside protection. If the company goes bust, there's a bit of money left in the bank accounts. Should you, the founder, get the money, or should I get the money, being the professional investor, put the hard-earned cash in?" So there was an argument for, well, if I give you $100 million and the company goes bust and there's $50 million left in the bank, maybe I should get that back rather than you. You put your sweat equity in, I put the hard cash in, whatever. But now it's double dipping. So the VC will go, I want a 2 times participating preferred liquidation preference. And what that means is if the company sells for 200 million or less, the VC gets everything. And only above that, then you share, right? And so by finding these companies that are already doing 20 million and 40% year on year, these companies are already valued at 200 million bucks, right? So they're valued at 200 intrinsically. You stick 100 million bucks cash in there, right? So now they're valued 300 million intrinsically, right? And, with 100 million bucks, something's going to happen. There'll be a bit of upside. Certainly within the next few years, the company valuation should go up because they're hiring people and it's not marked to market, right? Because it's all private. So what's happened is the founder has given up their equity in exchange for a call option and fame, right? Basically, an artificial stock price, which will not translate on the public markets. And then the VCs are sitting there going, well, I've got downside protection. Even if it screws up, I can sell for 200 and get my money back, and probably a bit more than that, right? So that's the game. And then the other game that's being played is what the VCs are doing. So with these valuations. So the trick is this: traditional venture funds get remunerated on a 2 and 20 model. So it's 2% of funds under management per annum and 20% of above a benchmark, right? So what you do is you go raise $100 million as a brand new VC. You deploy it instantly, right? So you spend it all, right? You invest it all. And now you're collecting $2 million a year for sitting on your bum. And what you do is you show in the first 18 months, and the Kaufman Institute wrote a report called, I think it's like a See the Enemy and It's Us, right? It details this in intricate detail. So the VC comes along and 18 months later goes, wow, there's a few companies in my portfolio doing the Series B. It's on an up round, right? Because these are all early stage companies. Everything's been up round for the first year or 2 years, 18 months. And they show an internal rate of return of just some stupid number. And they use that to say, hey, you should have gotten in fund number 1, but you can get into fund number 2. We're raising half a billion dollars now, right? And look at the fund 1 returns, right? So then they raise $500 million. They're now collecting 2% of that per year for sitting on their bum. So they're collecting 10 million plus 2 million. So they've now got 12 million bucks per annum doing nothing, right? They deploy the $500 million instantly, sometimes in the portfolio companies from the first fund. So pumping the valuation up even higher artificially, right? Yeah. 18 months later, rinse, repeat. You go raise $1 billion. Now you're sitting on $32 million per annum of revenue doing nothing, right? And now fund 1, the companies are starting to fall over one by one because VC investing is a portfolio game. So you need one to smack it out of the park and return the entire fund. Otherwise, you won't make your money back. They're starting to fall over. But then it's like, oh, that was fund number 1. Fund number 2 and fund number 3 are going great. Right, it's just a giant Ponzi scheme.
So right? I can really see why, despite your background in VC, that you've called it distracting for entrepreneurs. How do you recommend that an entrepreneur make a decision on when to take capital and when to bootstrap?
Well, if you can bootstrap, if you have the ability to bootstrap, and not every industry can do that, right? If you're doing hardware, for example, you need to have inventory, and that's expensive, right? And not easy, right? So you can't always do it. That's why software businesses are so good, because you can do it in software, and particularly marketplaces, because there's one copy of the software, right? And you update it once and it's updated everywhere. I would always try and start a business where I can bootstrap it and try and make a bit of money in, and then try and build it up incrementally, because you get to own the whole business, right? My previous business, it was you raise your first round of investment. You negotiate the term sheet. You look at it, kind of looks okay. You give up a couple of board seats. You give up some veto rights in the business. So you get going. Then if there's a Series B, you give up another board seat. You give up a few more veto rights, whatever. Get to Series C, Series D. Suddenly you turn around 7 years later and go, "Why am I a minority shareholder in this business? Why do I have no control? Why am I begging the board to do anything? Why do what happened? You've just boiled to death in the pot, right?" And it's just a horrible place to be. And most entrepreneurs will probably be surprised that when you see the term sheet, you sign the first term sheet, the very first term sheet, right? A few things happen. The first thing that happens is there's a clause in the term sheet saying, in 5 years we get the right to appoint a corporate advisor to sell the business. Full stop. No matter if it's going well, no matter if it's going badly, they get the right to sell it. And that's a wake up call, because it's like, wow, even if I do a really good job here, they could just sell the business from out from underneath me, right?
Yeah.
Because they got to really realize a return for their LPs. The second thing that the entrepreneurs do, and if you want a more detailed video on this, I've got it on YouTube. It's called "How to Not Get Screwed in a Venture Financing." Matt Barrie, search for it. There's a video from StartCon, which is a conference I run down in Australia. Everyone should come out to Australia and come to that conference. You should come, Andrew. We should get you on stage talking about domain names.
Definitely.
It's in summer this year. I'll send you an invite. 4,500 people. It's phenomenal.
Wow.
Speakers. Yeah, we get the VPs of growth from like Uber and Pinterest.
This is Australian summer?
Yeah, Australian summer, November,
nice.
December. Yeah. So,
cool. I'd love to.
Okay. So, what happens is, where was I?
You're saying on the first term sheet.
Oh yeah. So what happens is, number one, the business can be sold in 5 years. Number two, and this is the trick, right? The trick is, they go, typically a term sheet says, well, the board will be 5, and there's 2 seats for you, 2 seats for us, and we pick a non-exec independent.
Yeah.
Right. And there's 2 things at play here. The first is the golden rule, which is basically he who has the gold rules. And the non-exec is going to come through the network of the VCs, and probably if push comes to shove down the track, side with the VCs in a vote. So it's 3 versus 2 on a board, and that's it. The board can hire and fire the CEO. The new CEO comes, change a business plan, change a management team. You're gone.
Yeah.
Gone.
Yeah.
Right. So you lose control permanently, and you're never going to get board seat back. Once you give a board seat up, it's never coming back ever.
Yeah.
Ever.
Yeah.
You're not going to go from board of 5 to board of 3, right? Yeah. Unless you step down, right? So, yeah. Right. So you've just permanently lost control of the business permanently on the first round of funding. So if you can try and do it without taking money from someone, or if you do take money from someone, do it in a flat common stock structure. And the great thing about the stock market is it's 1 share, 1 vote, right? Yeah. In the US, you do have this multi-voting thing that it's kind of going on, but ordinarily it's 1 share, 1 vote. It's all kind of collapsed, and there's no preferred rights. Everyone's on the boat rowing in the same direction.
In public markets.
In public markets, yeah. Everyone's rowing together in the boat.
Even
you don't have this misalignment of incentives.
Yeah.
So.
Interesting.
Yeah. I feel like it really is so muddied in the venture markets. I mean, these companies are really it's
the valuation. So, what it is I call it the find a greater fool theory of investing, right? Of venture investing.
Yeah.
And so what happens is, a classic example of this kind of with Uber, where you go out there, you raise $100 million for your company, you dump it into a marketing channel, you make back 85. Right, the revenue goes like this, right? Yeah. You then raise 200, you dump it in the marketing, you make back 160. It goes like this. You go raise $500 million, you dump it in the marketing, you make back 350. It goes like this. You raise $1 billion, you dump it in the marketing, you make back 650. It goes like this, right? And you're just finding a greater fool. And then you run out of VCs, you run out of growth stage VCs. You got to go to the public-private guys like Fidelity and T. Rowe Price. You raise from them. Then you go to the debt markets. Then you go to the Chinese. Then you go to the Chinese debt markets. Then you go to the Saudis. Then you go to the Qataris. I think that probably the ultimate marginal investor is probably like the Qatari debt markets, right? You go through all these investors and you hope that at some point you figured out how to spend $1 and make more than $1 back. And then you can take it public, right? But if you don't figure that out, then you have a problem, because you come to the public markets and you have a collapse in value. And what you're doing is you burn all the previous investors. You burn all the employees, right? Everyone who's been issued stock for the last number of, if you a couple of companies come out recently and the stock is like halved or what have you, and all the shareholders for the last number of years have just got completely burnt.
I mean, basically, even Lyft. I think Lyft, the last couple of rounds of investors in Lyft. I mean, most of those folks were also earlier investors in earlier rounds, but those guys all lost money, I think.
Yeah, I think it's 57 at the moment. So market cap's about 16 billion. I don't know what the last rounds of Lyft were at, but I would say the last number of people that evolved that company in the last few years, investors or staff, probably are not getting anything. Or doing very well. Sorry, the investors make some money, but so we'll lose money. But the staff probably getting zero in the last couple of years. I don't know how to structure the incentives. Maybe there's something else that's happening there. But if it's call options, they're underwater, right? So,
So Matt,
Yep.
You have won a number of awards for employment. I think that's especially interesting considering that Freelancer is so much about alternative employment, right?
Yep.
Tell us about your values as an employer that that set you apart. What you think every young Mark Zuckerberg should know, especially for managing a team globally, which is more and more the norm.
Yeah, so we have, the company values are things like, what does the data say? How can we improve today? I poached one of them from Reed Hastings from Netflix, which was, we're not a family, we're a pro sports team, right? I love that one because people say, oh, welcome to the family. It's like, we're not a family, right? You can't fire your sister, right?
Yeah.
But you want the best players on the bench, right? You want to make sure that, you've got the absolutely best people on the team and they're performing at the peak, and product managers, for example, the coaches of the various products, and you've got to have the best players on the bench. And another big one is change lives, because we really do change lives. There's not many businesses that actually say we change lives. And if you go to freelancercom/quotes, there's about 10,000 testimonials there, and people have literally said, you saved my life, right? It's unbelievable. In fact, I'll read one out to you actually. I'll just pull one up. This is pretty amazing. So this is a test. You just can't make this stuff up. So we've got a quotes page, and then when we have like a birthday or whatever for the company, we'll say, hey, why don't you leave a note just to tell us, what Freelancer means to you. And someone wrote, I know today over 1 million users submitted their quotes, but despite all those users, maybe I'm different because my story starts only with Freelancer.com. Well, 2 years ago, my pocket was empty. At that time, I had no need for any money bag. It was a hungry situation. There was not any money to buy food either. It really was not fun. I can't forget that time. My father and mother died more than 5 years ago. Now I have over $20,000 in my bank through only working at Freelancer.com. So I think Freelancer is like my parents, actually not like. Freelancer really is my parents and my God, because Freelancer gave me life in this hard world. Thank you, Freelancer.com. Hope you go with Sun Power. I really love you.
Wow.
You could not make that up in the marketing department.
No.
Like, how do you make that up, right?
And what as CEO you are, Matt, that you're aware of this and reading this? It doesn't sound like, someone on your team had to run around and present it to you, but you really keep your nose close to the ground. Oh, look, keep his nose right here then.
I've got another one. Thank you. Congratulations, Freelancer. You there and we are here. You're doing an excellent job. I can tell you loud that you saved my life. I was unemployed 5 years ago. Too old to get a good job, but too young to retire. You can return a smile to my old/young face. Thank you very much, and congratulations and happiness for all.
That's really uplifting. That's sweet.
Yeah.
Old/young face.
Yeah.
Nice. You do like to buck the system. And I like that, you've served as an adjunct professor for all those years as a way to get freelancers. But you also, how many degrees do you hold? And, today it's cool in Silicon Valley to get into a great school and then drop out. But not you. What's your philosophy on education? And why have you pursued so many degrees yourself?
Education is the lubricant of upwards mobility. It's the way that you can make a greater life for yourself. And I did first class honors in computer science, first class honors in electrical engineering. It was actually a science degree, so I did physics as well, and electrical engineering. And then I did a master's in electrical engineering at Stanford. And then after that, I did a couple of degrees for fun. When I was in between Sensory Networks and Freelancer, I thought, well, if I'm going to be sitting at home trading stocks and building websites, so I may as well study at the same time, right, and use the time efficiently. So I got a grad dip in applied finance, and then I got a master's from a different educational institution in applied finance, and then I got
I know.
certificate
Okay, you've got a problem. You can't remember all of your degrees.
It's corporate governance or something rather. I can't remember. It's just minor things. But
what's your philosophy? What do you recommend to all these entrepreneurs who think they need to go drop out of somewhere?
You're nuts, because you'll never be able to get back into school again, right? Like Stanford won't accept me at 45 years old. They won't accept you. They want young people. And they don't want people who want to be entrepreneurs. If you write in your letter to Stanford, I want to go to Stanford to be an entrepreneur and start a big tech company, they won't let you in. They want people to stay to be a professor and get a Nobel Prize for them, because everyone wants to drop out. The last thing they want is someone to be an entrepreneur, right? By default, if you fail at being a professor and don't get a Nobel Prize, you will start a company and you'll give them an endowment later on, right? But they won't let you in, right? And so all these people that go out there and they go, yeah, I'm going to go start Theranos and drop out of Stanford or like that. It's just, you're nuts, because you don't know anything about anything. You're a kid, right? You really are, right? And you may think you're the king of the world, right? But you don't know anything, right? You've got to build a solid foundation, right? And you won't come back later on to university because they won't let you in, and you'll be too old or be too hard. And you won't have as life goes on, you get all these commitments. You get married, you get kids and whatever, and you got to pay for things and whatever. And you just won't have the opportunity to go back, right? It's a one-shot thing. And so you've got to go through it. You've got to complete it. And when I hire people, I don't hire people they've dropped out. It's funny, I had two guys actually interview for a job here in the same week. And the funny thing is they're both called Amir, right? And one guy, and this is in Sydney, one guy had masters in electrical engineering from North Carolina and went to Intel and worked in Intel for a few years and then came to Australia. And one guy had grades that just were like a yo-yo. He got like 86 in like quantum physics, and then he got 11 in his thesis. And up, down, and all over the place. And he went to UC San Diego for like 1 year for, I think, on exchange. And I said to him, what's going on with your marks? He goes, I started a company while I was kind of at university, and I had a shit lecturer on this particular class, and what about your thesis? I didn't like the supervisor. And I said to the guy, I don't think you like to work hard. Right? I mean, I can't. Why would I hire you? Your marks are all over the place. You can't complete a project.
Yeah, you're not focused.
Your CV is this startup, that startup, this startup, that startup, right? Why would I hire you, right? I want someone who's actually going to put the hard work in. And and they say, as a product, even for a product manager role, when you say you're going to deliver a product on this day, you're going to deliver the product on this day, or I'm not going to hire you, right? I'm going to fire you, right? And it's just amazing, like just seeing these two guys the same name. And one guy, clearly he was a smart guy because he had some marks that were pretty good. And I said, well, what else happened? I moved out of home. Like, my parents were very strict. And, the minute I got out of home, I kind of, went out and partied, right? And it's like, well, great. But, play hard, work hard. You're not working hard, right? So I'm a big advocate for education. Actually, at the governmental level, I think it's nuts to not provide, I'm actually libertarian. I actually won Libertarian of the Year Australia 2016, but I'm not a purist. Like, I think there are some things, I just think purely from the business of government, if you're running a government, you're nuts not to incentivize people to do certain degrees, not all degrees, but certain degrees that can that lead towards innovation and entrepreneurship and starting businesses. And they are, for example, the engineering and the sciences. If I was, Prime Minister for a day, I would subsidize that, right? Because the fastest way to lift wages, right, is you put someone in an advanced degree and then they go through that for 4 years, they come out and they start businesses and they get really high paying jobs, and then you make it back in income tax. And the amazing thing is, Silicon Valley has just discovered this business model. I think it's a startup. I think it's Lambda School. You go there and they give you an education, and in return you get a share of what you make in your job down the track. Wow, congratulations, you've just discovered public education. Well done, right? I think it's very, very, very important. I also think the other thing I think is very important is that, and I made the mistake of encouraging people straight out of university to start companies. And I really regret doing that. I used to say, it's never been a better time. Do it now. Go take the risk now, because when you're old, you have more responsibilities, etc. And it's never been a better time. It's cheaper. You can hire freelancers now to kind of build your website for you, build your business inexpensively, and all the other stuff is open source or cheap. Things like payment systems like PayPal or Google Ads or whatever. And it's been a bit disappointing, actually, thinking about that advice and how I've given it to young people, because I've seen a lot of people go out into startup land fresh out of a bachelor's degree, and with no big company experience, they don't know how to hire someone, they don't know how to fire someone, they don't know how to do a performance review, but they just don't know how companies work, right? And I had the luxury of I worked at IBM for a couple of years out of uni. So I saw how big companies work and how they function, how they do things, how they organize things, right? And if you don't get that, and there's not every startup becomes a success. 99% of them blow up, right? And it's only the 1% that do it, probably even less than 1% become big companies, right?
Totally.
And so you just have all these people just going from startup to startup to startup to startup to startup. And I've got friends of mine actually who are now close to 40, and I don't think they've worked in a company more than 10 people, right? Their entire career. And so then they try and come back into the workforce because they have kids, but no one wants to hire them because you've got no experience in any company of any size or any scale. It's been knocking around from startup to startup, right? 4-person, 6-person startups, and you've got, it's just, you're unemployable.
I'm a classic example, right? So, I've never worked in a big company. I have zero corporate experience, zero. Well,
you hear that? Matt Barrie just said you're unemployable.
I probably
you would be unemployable. Frankly, actually, once you're an entrepreneur, you are unemployable.
I probably am unemployable. There's you'd have to have a high tolerance for a lot of bullshit to hire me. Yeah. And but it's so true. I mean, we're at a point. It's like, we had 300% year-over-year growth, just about 2017 to 2018. Great growth this year, and it's like, okay, this thing is starting to outgrow me. I'm trying to get my arms around it, and I don't simply have the tools that you would learn in running a big company to do it, to get my arms around it, to like say, okay, we need to hire. How do we actually go about doing that, and training and creating processes, and how do we create a structure around what it is we've built, identifying what are the unique things that we, unique capabilities and skill sets and assets that we have that have caused us to do a better job than our competitors. How do we take that and turn it into a process, automate it, hire for it, supplement it. And it's something I'm struggling with as we speak. That's very real, tangible advice for me, because if I had that experience of knowing how to do those things, I think our business could probably be 10x what it is today. I think we'd probably have 70% market share for the top end of the domain market, for aftermarket. I think there's a lot of things that we'd be doing better. So we've got a great business. We're providing a good living for all of the people that work for Media Options. An amazing lifestyle as well for all involved. Something that's very unique and probably not available through almost any larger corporation. But we're limited. Our ability to scale is limited simply because I don't have the tools to do it.
Yeah, and the issue is that as companies become bigger, the more you kind of need those big company skills, right? Which is,
totally.
It becomes more and more about people management. It becomes more and more about building process in. If you have 500 people, one engineer can ship some code to the website, knock something down, and wipe out millions of dollars worth of payments, right? So you've got to start putting process in to make sure that these things don't occur. And so you need to have some level of big company experience. I think my advice for an entrepreneur would be go do a technical degree, like in engineering. My preference would be engineering. Electrical engineering, I think, is probably the perfect degree, because it teaches you a lot of discipline, because there's a lot of subjects in electrical engineering which are hard and you don't really want to do, but you're forced to do them. And so you're forced to have a bit of discipline, as opposed to computer science, which tends to be more of a mix and match and a bit play computer games and then do a bit of work and then come back, whatever. And then go out and get a job in a big company, follow a leader, right? You probably don't want to be a stagnant large company, but find a high growth company that's of some level of scale. Get in there, learn everything you can for 2 years, get out and then do your own thing, right? And then you're equipped. You're equipped mentally and professionally and psychologically to do it, right?
Interesting.
I can't even tell you the number of I always say all roads lead back to domain names. So it doesn't matter if you've got a pizza business, in Tuscany, or you're, a unicorn startup founder. It doesn't matter. Every business out there needs a domain. And so we get exposure to every type of business and every type of person. And, you know, if I were to, I'm just pulling this off the cuff, I don't even know what the real data is, but I can't even imagine. It's got to be a very high percentage of, like, the biggest domain sales that we've made go to founders of startups that come from PayPal, Google, Facebook,
Freelancer.
You know, it's like, yeah, exactly. Freelancer. You know, it's people that learned how to scale a business, how to do things at scale, how to build, you know, and make a you know, work environment thrive. And there's only so many places you can go to learn that stuff, right? And they take those skills, they leave after 2 years, 5 years, and they start something, you know, their own thing, and they apply that knowledge, and boom, they've got a successful company.
Yeah.
Hmm.
I just checked out pizza.com. Would you believe Pizza Hut does not own pizza.com?
I know.
It's
That's
just
a long story. Yeah.
Yeah, it's a long story.
Okay.
Matt, I have a tiny question for you. You know, 60% of CEOs are actually chemical engineers. So just tiny question, electrical engineer versus chem engineer, any comment? Was that intentional?
Well,
or just
87% of statistics are made up on the spot. I like to see the data behind that with chemical engineers.
I don't know. My dad's a chemical engineer, so I've heard that over the years.
Yeah, I don't know if that's true. To tell you the truth.
Okay, but you still stand by electrical engineering over chem.
Well, if you're in technology, you want to be in electrical, right? Because civil, you build buildings, and chemical is more of a, you're in a. I don't really see. In my world, I don't get a lot of exposure to chemical engineering startups, right? When I think of
I
chemical
hear that it's more about the thought processing, but that's fine. Tiny question. I really want to ask you. So most folks go from serial entrepreneur then to VC advisor, not the other way around like you did. But you know, you are so prolific online. You know, one of the top influencers, and I've in reading and listening to your articles and videos over the years, I've heard you mention here and there a dark time, but not much on the specifics. It sounds like, though, it was about forging your identity as a serial entrepreneur. And I see that's a real challenge for people at that stage who aren't sure. Are they leaving a big company? Are they going to be successful? What can you share about this dark time and what you learned through this struggle?
Well, I mean, you know, my last company was more of a solution looking for a problem, right? So I wanted to do security. I wanted to do chips. I wanted to do a chip for security. Great idea. Then try and retrofit that into some sort of market, you know, opportunity, right? And this is I see this happen all the time in startups, right? They're doing a Bitcoin startup. Why are you doing a Bitcoin startup? I want to be in Bitcoin, right? You know, why? What problem are you fundamentally solving? Well, we're kind of going to put pets on the blockchain. Like, why do pets need to go on the blockchain? Right? Like you know. Well, I want to work, at the end of the day, I wanted to work in crypto. It's like, well, no, how about you actually just think about what's a real problem that's big that needs that needs solving at scale, and work on that rather than be enamored in some sort of technology. Like I see people all the time, I want to do a machine learning startup. You know, I want to do a fintech startup. I want to do whatever startup. It's like, no, you got to figure out where the problem is, right? The bigger the hole, the more there is to fill, right? So, God, I forgot your question at this point.
And so you learned that by messing up, by, you know, trying, what did you even identify that you were a solution looking to find a problem? What did it take for you to identify that?
Lack of revenue. lack of revenue, and the smell every day I came to work of, what's that smell? It's the smell of burning cash, right? And the stress of like, shit, how much money do I have? When do I have to start fundraising? It's going to take me 6 to 9 months. Do I have to leave now? What the hell? You know, the VC's tranche the investment. Will the tranche come in? Will it not come in? What do I have to do? Stress, right? It's terrible. So,
No, I can see it. The memory is stressing you out, isn't it?
yeah, it's just like it's tough, right? Like when you're running a business that's generating cash, it's great because you can just stop for a day, and tomorrow you've made more money.
Yeah.
I can slow down, just think about this for a little bit. I've made more money, right? As opposed to, oh shit, what do we do now? What do we do now? Right? It's very, very, very stressful.
Yeah. How do you get out of that?
In the fish business, my old boss used to say, he was just 110% focused on sales. And he didn't give a shit about marketing. He didn't give a shit about advertising. He didn't give a shit about the website. He didn't give a shit. And
it sounds like somebody I know.
Yeah, well, I mean, literally, there was nobody in my life that was more influential than he was. And Peter Murky, shout out. So, he used to just say that if you came to him with a problem that wasn't related to sales, he would say, look, focus on increasing sales, and that problem ceases to exist. And revenue makes everything else easier. If you've got the revenue, you can solve problems.
I have a presentation on this. How do I get screwed in venture capital? I say revenue cures all. Revenue will atone you for all your sins, right? I get these young idealistic computer scientists coming to the company, right? And every young computer scientist, what does he want to do? Rewrite the code base, right, from scratch. Why? Because it's not perfect. Well, guess what? When you initially went to write the code, you wrote it in a certain way. Then you didn't anticipate it would be used in different ways, and then you kind of hacked it a bit. Then you hacked it a bit, and then you hacked it a bit, and hacked it a bit. Yeah, of course it's a mess, but all software is like this, right? Yeah. It's not like a university assignment where every time you do your university assignment, you can start with a blank sheet of paper and make it beautiful, right? I guarantee if you take that into the real world in production, it's going to morph into all sorts of ugly ways and become a complete nightmare, right?
Yeah,
so just like a building does. Exactly. You use a building, it evolves over time, and you put an add-on, you change the roof, the windows, the air conditioning systems. But at some point, you've written down the capital expenditure for building it to the point where you say, okay, fine, now it makes sense to tear this thing down and build something new. But you can't just do that every time you find a better way to go about it.
No, it's how you kill companies, actually, if everyone stops and then you're not producing new features and doing what have you. And it's always a challenge because even in a company like mine, you do have to bite off on technical debt sometimes, right? And so we're doing that right now with the front end for freelancers. We're ripping it out, replacing the whole front end with like this, advanced Angular web-based stack. And it's a problem because all the engineers working on that particular project are not generating revenue, right? But if you generate revenue, then you can hire another team, and the other team can go behind you and fix up all the problems, right? And then if every month you're making 8% more than you did last month, then you're growing at 100% year on year, and all your problems are solved, right?
Yeah, true. Name your top resource recommendations. I know you've mentioned NewPlot over the years. Is that even how you say it? Are you laughing at me?
Well, that's just open source graphing software, right? Just draw some graphs, right? Like that's all the tools you need now to build a business, internet business now are pretty much open source, which is great. So it's got everything out there.
So both for building the business and say, book, conference, podcast. What do you listen to? What do you recommend?
I listen to a podcast called Macro Voices, and this is a macroeconomics podcast. If you kind of understand macroeconomics, you understand how the world works, right? You understand, oil price went up today. Why did it go up? Right? It went up because something happened in the Straits, Persian Gulf, right? And that caused some sort of crisis, right? Mm-hmm. And the risk premium came into the oil price. And then that explains why the US government is doing this and why Europe is doing this and why China is doing that and whatever. And why is the gold price down? Why is bond rates changed? Like, if you understand all of that, you understand how the world works. So I love listening to that. I also read things like Zero Hedge, right, which is like a very bearish financial news site. But what I like about it is there's no bullshit. Like you watch CNBC and it's like Bitcoin price is up. Let's interview a Bitcoin founder, right? You got a Zero Hedge and they go, well, let me tell you why the volumes are bullshit. And here's some graphs of some of the trading patterns and what have you. And here's an indictment of a Bitcoin exchange founder who's been arrested. And everything's there, right? And it's pragmatic. It's how it is. So I read that sort of stuff religiously. because I just like to know how the world works, and it kind of explains how the world works.
Okay. What are your favorite open source tools?
Oh, it's all the stuff that runs my business. It's all the stack. I mean, I don't get to code much anymore. They call it founder code, which is found it. We're ripping it out, right? If I write, but we couldn't build this business without your Linux stack and all the tools that come with it, PHP and Varnish, and Memcache, Redis, every Terraform, Puppet. I mean, every MySQL. Every day there's something new. I mean, Jesus Christ! If you want an industry that moves quickly, just look what's happening in systems engineering. Like, it's just
that was literally the reason I didn't do it. So I knew I wanted to go IT. I ended up doing management information systems, database, basically.
Yeah.
And basically, by the time I graduated with a degree, I was like, this isn't what I want to do. And I almost went computer science, but I realized I was like, if I go this direction, my life will just be completely reinventing myself and relearning new code, because every couple of years something newer and better, and there's going to be younger people who learn it faster and do it better, and it'll be a never-ending cycle.
But the positive thing is, if you do have a degree, then it becomes easier to hire these people, right? So you know who's good, you know who's bad. You can tell. The engineer says it's going to take 6 weeks. Why is it going to take 6 weeks? No, I think you can do it in 2 weeks. Here's how maybe you should think about it, whatever. So you just got to think like that.
Yeah, that's a good point.
So but it is an amazing time to build a business, but the technology is just moving so quickly.
Yeah.
So Matt,
the great thing is you can hire freelancers to do it all for you now.
Yeah, good answer. Good answer. You're so charismatic, Matt, and you're one of the top influencers in the world, really. Was that accidental or intentional? How do you leverage it today?
I don't know. I occasionally write things, and I'm not afraid to say things how I think they are. I mean, one of the things that kind of really opened my mind up a little bit when I went to Stanford was there were all these complicated subjects that when I was at Sydney University, the professor would try to explain it, and it just be so complicated to understand what they're trying to say. And then I discovered you go to Stanford and they say it in plain English, as it is, and you realize the professors back at Sydney University were trying to make it complicated to make themselves look smart, right? But you can say things in very plain, direct English. And the more the time goes on, the more I have more responsibilities, more things to do. I manage more people, and more businesses to run. I don't have time for the bullshit, so I just say how it is. Like, if someone's doing a bad job, you're doing a bad job. Here's why, and this may be how you can do it better, or you're doing a good job. You're doing a good job. But I just say it direct, and I'm quite blunt. But you just don't have time to beat around the bush, right, and gild the lily, right? So I'll when a journalist calls me to ask about something, I will always tell them an interesting anecdote or a very quotable line, right? And I won't be afraid to be controversial. And then I write an essay. I'll do it in a certain style, and I'll get a lot of pickup. I mean, one of them, the third last one I wrote, I had 1 million people read it in 2 days, and then 15,000 people marched. 15,000 people marched in the streets, and it spawned a political movement. Right, so that was pretty good.
Pretty good, right? How do you leverage that?
Well, I didn't really want to leverage that.
No, it's just general. But I had a business to run. A lot of power.
Well, I think I just say what everyone's thinking. Just say whatever. In some ways,
But on the tail end, what do you do with that?
I don't know. Just provide entertainment for myself when I'm not working.
Yeah.
I don't know. We'll see if you're prime minister someday.
Oh, no. That'd be a terrible job.
Yeah, you really have to be,
Oh, why would you want to do that?
Yeah.
I hate working in committees, and this would be like the worst committee in the world.
Yeah.
And instantly half the population hates you just because they were born from some parents that had certain political leaning, and you're on the other party. So instantly half the world hates you, and
zero reward.
So Matt, you are so entertaining and so interesting. We have used up tons and tons of your time. Do you have time for 4 questions about Freelancer?
Your time starts now.
All right. Good thing I didn't give you a time. Okay. When you acquired Freelancer.com, the domain name itself,
Yes.
I want to hear about the data-driven results of changing to Freelancer.com and what escrow service you used.
I used Escrow.com before I owned Escrow.com.
Okay.
I think it was the first time I used Escrow.com, actually. It would have been the first time I used it, was to buy that domain name.
Okay.
And I don't know who recommended it or how I came across it. I guess that was just the way things, if you buy a domain name, that's what you use.
Okay. What results did you see right away from changing from getafreelancer.com to freelancer.com?
It was instant. Like instantly, it was just like, wow, I type in freelancer, we're just everywhere, right? You speak to a journalist, the journalist will take your calls, right? Every time an articles would be published, well, you didn't even talk to the journalist because they're going, okay, well, let's talk about the gig economy. What's some companies? Then there's Google, there's freelancer.com, of course. And what's the other one? What is that? And the other typos, competitors' names and all that sort of shit, right? It was just, it was
instant. Okay. And in SEO results?
Yeah. Overnight.
Overnight.
Done. Done.
Okay.
Done.
All right. Conversion rates, marketing spend.
Well, I mean, it's the best marketing dollars I've ever spent. Right. If I could buy this domain every month and get the same impact, I would, and I would stop spending money on Google.
Yeah.
Right. I would.
Nice. Okay, question number 2. Well, there you go. The domain name's material impact. The short term and then the long term material impact of owning that domain versus an alternative brand. How would you calculate the enterprise value of freelancer.com, the domain name, to your business today?
We have the best brand in the entire industry, and everyone else is subordinated. Everyone else is like, there's nothing comes close to it. Everything else is a mishmash. There's nothing that comes close.
Percentage of your brand value? Throw out a number. You're such a number.
I don't know how to calculate that. But just the point is that, you say the name. Oh yeah, I've heard of that site. Or I've used it or whatever. It's just, and the competitors' names. Oh, maybe they mentioned. Remember one or two of them. They don't remember all of them.
Yeah.
It's just you can't. It's just it's the best money I've ever spent.
Yeah.
Full stop. And I'm so lucky I spent it before a competitor bought it, or I'd be screwed forever.
Yeah.
Yep.
Yeah, ain't that the truth?
Forever. There's nothing to do it. Competitor gets that name, I would have been permanently get a freelancer, and they would be freelancer. I'd be permanently at least number 2. Never be number 1. Never. I could never imagine a situation where get a freelancer would be a bigger business than freelancer. Right?
Yeah.
It doesn't make sense to me.
Quick question of my own. I always tell people that the most fundamental utility of a domain name is to decrease your cost of customer acquisition. You think that's a fair statement?
100%. Unquestionably.
Yeah.
And it also increased the cost of our competitors' customer acquisition because one of them changed the terminology to contractor.
Yeah.
So they had to change the whole marketing strategy around contractor, and then you got to reset the SEO and blah blah blah, and then they had to come back again when they realized it's futile.
Yeah, and they just keep driving mind share to you.
Yeah, that's right.
Yeah.
It's like a Rockefeller situation, right? Everyone, if you want to ship oil, you got to pay the railroad, right?
Yeah. Exactly.
Yeah. What, parting words, if you could give one piece of advice, actionable advice to, young entrepreneurs today, for competing and succeeding in today's digital economy, what advice do you have, Matt?
Just do it. Too many people just have these mental mountains in their minds that I can't start this because I've got to raise some money from someone, or I can't do this until this happens. I can't do that until this happens. I can't do that until someone says yes. Just gonna do it.
Yeah.
Just go and do it. Just do it.
Yeah.
Do it and iterate and get it out there.
Yeah. Good for you. Yeah. Well, you've done it, Matt. You're amazing. Thank you for taking so much time to talk with us today, and really to share with the next generation of entrepreneurs. You're a big deal and a good guy. Thanks.
Thank you. Great.
All right. We'll see y'all next time.
Thank you.
Thanks, Matt.
Are you going to NamesCon in Portugal?
I'm not, but I'm pretty sure someone from Escrow will be going. I haven't asked. When is it?
In like 3 weeks. June 20th to the 23rd, something like that.
I'm sure someone from the team's
23rd.
going. I think Clara was just in Helsinki at RIPE or whatever it was, the IP conference. I'm sure someone will be going. Yeah.
All right.
Yeah.
Hey, so real quick, because I know we really have eaten a lot of your time, but 2 seconds. So I had mentioned to you about this whole concept of securitizing domain names.
Yes.
And so I can't get the idea out of my head. I accidentally listened to this interview with the founder of a company called Rally Road, who is securitizing classic cars and basically IPOing an individual classic car. And they're getting a lot of momentum. So, they're like oversubscribed for the next funding round that's not even open yet. And he was just saying all the right things. It was exactly all the ideas that I had about domains was the way that he had thought about his business for cars. So I reached out to him, and the guy got it immediately. And so we're going to partner with them to, I just got the LOI on Friday, and we're going to partner with them, and we're going to securitize domains and IPO individual domain names and later portfolios or niche classes of domains.
Where are you going to, which market are you going to put them on?
So they've got their own proprietary marketing. They're fully SEC compliant. Their whole background is about taking companies public and securitization. I mean, that's their whole.
Right,
their whole
but
cars.
where's the liquidity coming from?
What do you mean? I mean, individual investors. Anybody who wants to own a piece
if
of.
I want to sell the share, where am I selling it?
So at the moment, because they haven't gotten the scale that they're trying to achieve yet, they've got like an OTC type of market. So they'll open a trading window once a week. Basically every Friday they open like an OTC window, and people can trade shares. And I believe they told me, something like 10, 12% of the shares will trade every time they open the window of the various assets. And but ultimately they'll be launching like a new, like a NASDAQ. They'll have a real-time trading market, but they want to make sure that they get sufficient liquidity before they do that. Because basically they don't want people being able to come in and like manipulate the market,
Interesting. I think the issue there is you just won't have the liquidity to make it work. You need a lot of liquidity to make this sort of stuff happen. It's an interesting concept. I just emailed Zach to tell him to go use Escrow.com.
Yeah. So this is actually the other thing. So this like leads to 2 things. One is I've already told them that they should use Escrow.com. They didn't even know you existed, and they were like, "Oh my God, this solves so many problems for us." And so you definitely should have a conversation with them because they now are aware of you and they understand exactly what it is you do and that you are a perfect fit for what they're doing. And then secondly is when we finally launch the securitization of domain names, one of the biggest things they're trying to do is get this to a point where they can bring in, apparently they've already got a lot of interest from institutional investors that want to come in and buy up portfolios of these classic cars. They're fully securitized, SEC, compliant. And
so who looks after the cars?
So this is part of their problem that they've got is it's a disaster. I mean, they've got various warehouses that they're contracted with, but I mean,
the cars just sit there?
Yeah, the cars just sit there. So their next phase, the way that they're going to try and monetize this to not just, they're never going to be able to monetize it to the point where they provide a return to the investors. The investors are banking on capital, asset appreciation. But they're hoping to be able to provide enough cash flow from these assets to pay expenses. Like with cars, you've got insurance, storage, transportation, and whatever other unknowns. Heavy transactional costs. Domains, it's negligible. And so we're going to need a solution for, obviously, transactional that you already do, but holding the asset. So I'm wondering how we could create a product for you that would be do you have the sufficient licenses to be like an institutional custodian?
I would have to look into exactly what's required for that. The answer is I don't know. I'd have to talk to my VP compliance, and the question would be, what exactly would be custodian of?
Domains. So for example, Rally Road shouldn't be holding the asset, right?
Yeah, I think we're fine for holding the domains. We can hold them in our accounts. I think we have no issue there.
Keep in mind, this isn't like a normal domain holding transaction, so you have to create a new product for it, which is because this is like an indefinite hold. Like you're going to hold this indefinitely until the domain would be resold. But the more likely scenario is that this domain will just be leased out, and so it might move from, it'll likely stay in escrow for a very long period of time in most cases.
I like the sound of that.
Yeah, exactly. That's why, honestly, like I'm really, it's hard getting your ear but I'm telling you, this is an extremely interesting business. And I think it has huge benefits for escrow. Because I think you could actually.
I'll tell you what you could do, actually, and I think you're probably thinking about this the wrong way. I'll tell you what you should do, Andrew, if I could help you with. You should raise a couple $100 million and buy a portfolio of domains and IPO that on the stock market and just manage the yield. So you just like a listed real estate investment trust.
So that's what Frank Schilling is trying to do right now.
Right.
That's why just yesterday or Friday he launched. He put up a new landing page that we are now providing liquidity for domain investors and portfolio owners, it's called Uni Liquidity or something like that.
Right.
And his plan is to securitize those portfolios and then take them public.
Yeah, I think you could just do it as a listed real estate trust, exactly the same way. I think you could do it right now, and it would actually probably be pretty favorable compared to real estate. And I'll do it in Australia because it's easy to IPO stuff in Australia, really easy.
Yeah. Yeah.
Right, but the thing is, to make it work, you're gonna have to show how you can generate yield. So you're gonna have to show like that, at some little scale you've generated yield on domains. You can definitely show the buy-selling bit, but you'd have to show, okay, you've got the capability of leasing out 100.
So this is the point: is that ultimately, like I see this nice little trend of domains are gradually appreciating and they're getting to a point on the best names where the startup who needs that name simply can't afford it, or it's just not an efficient use of capital to just lay out the cash, buy the name. Yeah. And so more and more we're starting to see people doing these domain holdings where it's a lease to own. And so they've locked it.
It makes sense. It's just like a startup doesn't buy the building.
No.
Right? They just rent the space.
It's all mindset. Right? It's all mindset. And the key, in my opinion, is two things. One is getting everybody to understand domain value. And then two is eliminating the reputation issue, which is nobody wants me on their cap table. Nobody wants me holding your domain. Even if it's an escrow, it's like they don't want to ever deal with the domain investor again. But if you've got this one entity that is like, that's their role. This is what they do. There's no emotions about it. It's like, it's like a REIT. Nobody's got a problem leasing a building from a REIT. Yeah. So whether you're the platform or whether you take all of this into one single security, but come in and there's a one-stop shop. You lease this name. Maybe there's an option to buy, but you're leasing for 99 years, and it goes.
But the problem with these Rally Road guys is they're thinking the wrong way around. They're thinking about selling $50 shareholdings in a car, I say fuck that. Go raise a couple $100 million, just buy all the best names, IPO that, and just manage the yield on that. Just like a REIT. Only you'll have probably better returns than a REIT.
Yeah, phenomenally.
Right? Yeah. And if someone defaults, well, you get to sell them again, don't you? Or lease it again.
Yeah. Yeah. I mean, I just look at my business, right? And it's like, I could do my business, you know, there's a limit to the scale, but I could be 5x bigger easily. I could probably be, you know, 10x is maybe pushing it, but I could probably do 10x. And when I say my business, both sides, like the brokerage business as well as just the portfolio business, you know, and I don't know, the returns that we can generate on that capital are absurd. I mean, people don't even believe me when I tell them the returns that we generate.
Well, how much do you think you can, I mean, how much do you think you can, what yield can we get on a domain name?
Deploy. Well, so, I mean, this is the issue is you can't go out and raise $500 million and deploy it. You just can't. Number one, because you're going to drive up the value of domains before you can deploy your capital. And number two, at any one time, there's not enough names of the caliber that you want to acquire. And so it's going to take, you know, 3 to 5 years to deploy $500 million in capital effectively, right? You could do it. I could go out and buy $500 million domains right now, but not effectively, not generating the type of returns, you know, that I would want to generate.
Well, how much, like,
I think
how much,
50 million is your max that you could deploy like right now, like in a 12-month or less period. Now, maybe
I think,
maybe 50
well, it comes down to what yield can you generate. So, I mean, what yield could you generate on $1 million domain?
I mean,
what would someone pay?
So on average, we're selling our top names. We're selling through at it's around 2 to 4 years. I don't know exactly what the number is, but we turn it over in 2 to 4 years on average on a big name. And we're turning that over at least a minimum of 3.5x, which has only recently come down from a 5x average. And many of these are turning over at 7, 8, 10x.
But I'm thinking more of like I'm thinking more of that like a lease out thing. So if you lease $1 million domain, how much will someone be like?
Yeah, so we're getting 5 to 10% deposit up front, which buys them an option, and then we're getting usually the higher the value or the higher the price, the lower the yield. So on a lower value name, we're getting 2 to 4% per month, and on the high value names, we're getting between 0.5 point and 1.5 points. I'm always target 2% per month is my target. No matter the name, it's like, you know, when I start my negotiation, I'm looking for around 2%. And then if they'll give me more upfront, I'll reduce that. If they'll, you know, if that's a number, if we're talking about $5 million name, I'm not going to charge them $50,000 a month. I might charge them $25,000 a month or $15,000.
2%, you're making 27% per annum.
Yeah.
It's pretty good.
Yeah.
What do your costs?
Even at 1%, which is probably around our average, or median at least, you're talking 13%, which is still great because your carrying costs are nothing.
Yeah, so I think you'd need to have about a minimum $75 million worth of assets to IPO it, because then you'll be doing $20 million per annum. Probably round it up to $100 million. If you can deploy $100 million, you can IPO it, I think. You do it in Australia because you can do it so cost effectively. We've got lots of REITs here. If you're paying out the dividends, every 6 months you're paying out a dividend, people are like, fuck, okay.
Yeah.
Yeah.
Exactly.
I mean, the big question is going to be, will something come along that will disrupt domain names?
I don't know. I think I don't know. I don't know where it would come from. I think that the way that we're going to interact with domains, I don't think there will be a disruption to domain names themselves. There will be nothing that replaces domain names, just because too much infrastructure is built on top. The whole digital economy is founded upon the DNS system. And even Bitcoin, it's like, I love watching these Bitcoin guys that are like, we had two of the biggest Bitcoin guys come on DomainSherpa. We had these debates. And it's like, what you guys are failing to understand is that you're claiming the Bitcoin network is the most secure network that's ever been deployed. But actually, the Achilles heel of Bitcoin is the DNS system, because every fucking packet is passing through the same pipes. They're all going through DNS, every single data packet. And so the Bitcoin network, just as a single example, it's like, you guys are, the whole world thinks this is a completely separate, independent network. The whole thing is relying on the DNS system as a backbone.
Well, I'll tell you how we get this going. Is got to start with domain name financing, right? So, I've got to be able to go to a bank. I know plenty of investment banks or whatever, and say to them, I want you to start lending against domain names. We've got the data. We've got the data for 20 years of history, right? They'll need to have some sort of idea about, if there is a default, how resellable is it, right? So if you can put together some data on, what you kind of need to do is you need to kind of just do a little white paper, maybe a confidential, internal use only sort of thing, on how long on average does it take you to sell a domain name, and what sort of returns you're getting on it, etc. And we basically just need to go to a financial provider and say, hey, we want to offer financing, domain financing.
You've probably got a better handle on my data than I do.
Well, in January when we saw you, Matt, you mentioned, I want to say Silicon
Valley Bank, yeah.
Valley Bank, yeah.
There's plenty actually. Saxo Bank. We've already talked to Saxo Bank about that, and they couldn't quite get their head around it. But there are plenty of, there are a lot of banks out there, and the yield. Who thought the risk-free rate was 0%? I mean, Australian interest rate is 1.5%. US interest rate is at 2 point something at the moment.
Yeah.
There's not much yield out there. If you can say, well, hey, here's an asset that's not just appreciation in terms of capital gain, but also is generating a 27% yield, right? Everyone's going to throw money at this like fucking.
Yeah, it's like, what?
Like,
yeah.
Yeah, like, exactly. We go crazy for this.
Yeah. I agree 100%. So we're deploying in the next 10 days, hopefully. I've just given them a mandate today. We're going to deploy a new, basically just starting out with a landing page, not unlike what Frank did, but nextdoor.com. No, not Nextdoor. Glassdoor. No, not Glassdoor. What the fuck is the name? Opendoor.com. It's like the first platform for fast liquidity of real estate. So just put in your address, put in your contact information. You'll have a quote within 24 hours to sell your house. No real estate agents, no fees, etc. Fast closing. I think they promise to have you'll get paid within 15 days or less or something. And so we're going to launch exactly the same thing for domains. So you want liquidity? Boom, here you go. And then when we get volume that exceeds what we can buy, I want to start plugging in other investors, right? So that they can then start financing this deal, and ultimately just create a syndicate on the back end where it's a single entity providing the liquidity for this deal flow. And instead of having people competing for it, I'll have there's only going to be 10, 20 guys that are currently materially active in buying up high value domains at the wholesale level, the investment level. And if I can get those 10 folks on the back end of this into a syndicate that we're just providing the liquidity for all this deal flow, I think that's great. Tie-in. It's like, okay, guys, look, we got this syndicate, and the exit strategy on this syndicate is to just take it public with the portfolio, and then continue dancing. Then we've got public liquidity that we can rely on, to continue our acquisitions.
Yeah. Well, I think it's very interesting. Very interesting. We absolutely want to provide financing. I mean, you go buy a car, there's financing for a car. You go buy a house, there's financing for a house. We want to offer financing for domain names. So,
I mean, it's so natural. It's like it's going to increase your deal flow. going to increase the number of transactions.
Yeah, look, and you think
the length of those transactions.
You think it from a VC's perspective, right? Like, I don't really want the company spending X million dollars in their domain name, right? And besides, most of these companies are going to flame out anyway. So as long as you've got the option to buy it down the track and secure it down the track, right? Yeah, we'll just release it for now. Well, lease it for now. Lease it for now. The thing blows up,
Exactly.
Yeah, it's funny. You look at all these companies that don't go so well, like Zynga, and the biggest asset they've got in their books is their building. they build a building, and then they're like, okay, well, I've got $100 million because I built the building.
Yeah, Salesforce goes down. It's the real estate portfolio is the value.
Yeah. Interesting. Okay. I might throw a landing page up on Escrow saying, hey, domain name financing available, just enter your name and the price, and we'll give you a call, sort of thing, and just see what comes in.
Yep.
I've got the domain name to off the business through funding.com.
Oh, yeah, that's right. Yeah, amazing. So we're gonna do the glass door, or no, I can't even remember.
Open door.
Open door. We're gonna do it on DNX because we created the marketplace that I was telling you about. It's closed loop. It's not available to the public. Invitation only. We've just started last week populating it. We've only onboarded a couple of our key clients and in our own names, and we haven't actually brought buyers into the platform yet. And
I'd like to take a look and see if there's anything interesting there.
Yeah. So we'll be probably ready to announce it in the next month, and once we've got sufficient names listed, and then we'll start bringing buyers in.
Okay, looks good.
Yeah,
exciting.
So yeah, cool. But think about the the securitization thing. I mean,
personally, I think it's a clusterfuck when you're selling $50 lots of stuff to people, right?
That's their problem. That's their problem.
Like,
we're gonna get 15% for every deal that we bring in. We're gonna get a carry. We're gonna get.
I think it's for all that effort, it's just as easy to go, or just as hard to go and raise $100 million and sell $5 million chunks to people.
Yeah.
Right. It really is.
Yeah.
It's the same level of effort, only you're making real money.
Yeah.
Right.
Yeah.
But you like that because there's a team already there ready to go, don't you?
Yeah, I mean, for me, it's plug and play, and there's zero risk involved.
And then we can get around to the other things someday, like we've always talked about, with our team that we're going to find on Freelancer.
I've already introduced you to Ara, so I emailed him while.
Yeah, I saw that email. Yeah.
Okay, right, good to you guys. I've got to go home now. So.
Nat, you're amazing.
Thank you guys. Enjoy. See you.
Cheers.
Cheers.